Yeah, good morning. If you look at the raw material prices, what we did see overall last year is a significant increase year on year of 25% for our raw materials. However, we are seeing some easing in the fourth quarter. We saw them slightly down, and we are projecting further easing of about mid-single digits, around a 5% decrease year on year for the year ahead.
Would say the same, would you, about the energy input cost as well?
Yeah, if you look at energy, we saw a steeper increase. We saw last year on year, an increase of about 35% in energy cost. But here again, we do see easing. We saw energy costs in the fourth quarter coming down already versus the third quarter. Now here, if you look forward, because we do have some of our energy costs hedged, we still see a year-on-year increase this year for energy, but it's actually not a significant number anymore.
Conrad, it's Karen here. Just jumping in about the European numbers, up 6%, well and truly outpaced by other jurisdictions. It seems double digit in areas like North America, up 16%, Latin America, up 18%, Asia Pacific, up 15%. Do you see any improvement in Europe?
Yeah, Europe is for us clearly the market where we saw the most slowdown. So if you look at our revenue in the fourth quarter, overall we saw 12% revenue increase year on year. That was actually 13% pricing, but minus 1% volume. Europe was the only region for Clariant in the fourth quarter last year with negative year on year volumes. We were at roughly minus 10%. What is important to note is that almost half of that it was caused by significant destocking. We do see continued destocking into the first quarter, but we should see actually the end of that and even some inventory replenishments in the second quarter ahead. So Q1 still very much the same trend as Q4 for Europe, a relatively weak start of the year, but we do anticipate a sequential pickup in the quarters ahead.
Can I just get to the margins? Group EBITDA margins seen at 19 to 21% over the course of 2023. We've had a lot of focus on import prices in the last 24 hours or so. What are you expecting in terms of the products, the ingredients that you're working with at this point?
Yeah, if you look at margins, we first of all are extremely pleased that last year, if you look at our overall EBITDA margin, in line with our guides, we actually finished the year ahead of prior year at 16.4% EBITDA versus 16.2% prior year, if you correct for the restructuring charges in Q4. Looking forward at this year, again, it is our ambition to slightly improve on our EBITDA margins from prior year. And what we do anticipate on raw material inflation is a easing of overall raw materials, mid-single digit decline, where for us it's very much the ambition to hold our pricing and then hopefully see some expansion in our margins.